We're smooth 98.1 FM. Good morning and welcome to Business Express this morning as I've been joined by our guest and we're ready to talk business and how it affects you at this time. I've been joined this morning by Callista, Chileke, Consumer Goods Analyst, AI and Securities this morning. Good morning to you.
Good morning. Good morning.
All right, so let's begin this morning by letting you know we expect to hear what your thoughts are, especially, you're the client. Let's see what you think about this discussion. Forex and inflation impact on Nigeria's consumer goods will be what's on the menu for us, and Callista will help us make a better understanding of it. We expect to read your messages as we go along. Send them across to 0809 or 4440981 will be where we like to read that message. Once again, 0809 444 0981. So let's get into the heat of this conversation, which is first, these days, it would seem the logical thing to do is when you wake up in the morning would have been more like you first want to check your heart to see if it's still beating. But as a Nigerian, it would seem more like it's after you wake up, the first thing you need to do is check if what's the rate of the naira. Then you check if your heart is still beating. And that's where we're heading to. So the naira closed yesterday at 1,419 naira to a US dollar. And how is this impacting consumer goods companies in the country?
Okay, so the FX liberalization policy that was implemented sometime in June last year, in June 2023, has seen the naira depreciate relative to the US dollar significantly, and it has caused several issues for the Nigerian economy, including the consumer goods sector, as you have pointed out. We saw that the implementation of the policy. After that, the H1 2023 earnings result of many companies within the consumer goods space recorded significant FX losses. Now, many Nigerian consumer goods companies are very import dependent and are net consumers of most of the imported raw materials. For example, we see that companies like flour mill and Dank Sugar import almost 100% of their wheat and sugar. And this shows how the sector is very sensitive to changes in global commodity prices, as well as exchange rate depreciation and import duties. Overall, the depreciation, I would say the depreciation of the naira is weighing on the bottom line revenues of these consumer goods companies.
Okay, that brings a lot of curiosity in this. So, what then are we manufacturing? If we most of what we say, we look at how usually the things we import and in order to get things manufactured in the first place. What does it say about the kind of manufacturing we do in Nigeria?
We in Nigeria we import, like I said, we import most of our raw materials, right? So with the exchange rates going up, it's very difficult for companies, and with the FX supply shortages and everything we're facing in the country, it's very difficult for companies, especially in the Nigerian consumer goods sector, to get more FX to buy these imported raw materials, and that is what is pushing down their profits. That is
So
it.
this brings us to the concept of shrinkflation now. That sounds inflation and shrinking being squeezed into a marriage right now. That's a union I see in this words. But let's see in Nigeria's consumer. So just help us explain this concept. What brought about this union?
Okay, basically, shrinkflation is a term that I use to describe when the quantity of a product decreases while its price remains the same or increases. And it's a type of inflation basically where we see consumers paying either the same or a higher amount for a smaller amount of for a product. For some time now, this has been the situation in the Nigerian economy. You go out to buy something and you see yourself paying higher for a smaller quantity. And sometimes you pay for something and you realize that it has dropped significantly in quantity. Just recently, I bought a beverage and it wasn't even filled up in the container. I screamed though, because hey, but with the current economic situation, rising input costs, higher exchange rates, and whatnot, shrinkflation is a strategy by which these companies use to maintain their appearance of price stability while adjusting the actual value of the product. That's just what it is.
I like to still stay with this. Let's take it down home to the person listening right now. So you buy, let's say, a pack of, let's say, detergent or probably, let's say, chips and all of that. and the size is the pack is not reduced, but you find out why am I having it just half all this way, and then you've got air pumped in all the way up there. So for every five, it will seem like for every five pack they make, they use
Mm-hmm.
an extra one falls off by the
Yes,
reduction of the
they
quantity.
reduce the
So
quantity
so
and sometimes the value.
is that smartness, or you have just you are ripping off the consumer?
Well, it's business. They are trying to hedge themselves against losses, I guess. So,
Okay, so this would lead us to, would the immediate reaction to be passed on the price increase to consumers? And if yes, what would be the impact of this decision?
well, we've seen many, if not all companies, hike their prices in response to the economic challenges that we're facing, and it's a major contributor to the rapid rise in food inflation in Nigeria. Companies are facing the challenges of exchange rate depreciation. That's what we're discussing today, which feeds into higher input costs. As in order for them to realize profit out of all these increases in production costs, we see these companies pass down the cost to the final consumers in form of price increases, subsequently leading to inflationary pressures. But I like to say that there is a limit to which consumer goods companies can pass down their costs. And for one, you see companies producing necessities or essentials may have the leeway to hike prices, but for companies that produce goods with substitutes, there's a limit on how much price increases they can implement.
Mhm. So in all of this, the consumer bears the final burden, as it would seem eventually, and it might begin to wonder, so no one has my back. But let's see, what strategies can the consumer now of these goods firms carry out to shield them from the impact of the weakening exchange?
A major strategy for Nigerian consumer goods to hedge against this depreciation of the naira is locally sourcing for raw materials. Like I have mentioned earlier, many Nigerian consumer goods companies are import dependent, making them prone to large FX losses. Getting the raw materials they will need for production from within the country here would go a long way in reducing their FX losses. However, we cannot ignore challenges such as insecurity, poor infrastructure, substandard quality, which deter or discourage these Nigerian consumer goods companies from locally sourcing their raw materials. They could also make use of forward contracts by which they lock in a future exchange rate for a specific currency, that's the dollar in this case, which allows them to hedge against potential currency fluctuations by agreeing to buy or sell at a predetermined rate at a future date. So locally sourcing for raw materials and the use of forward contracts will help firms to hedge against depreciation of the
All
exchange
right.
rate.
If you just joined in, I'm having this conversation, very interesting one, which I know if you look around you, every day you see this happening and wondering why. And this is the phenomenon. Callista, Chileke, consumer goods analyst, ARM Securities is helping us get a better understanding of. So we'd like to read your thoughts this morning. If you've encountered any of this situation where the size of the packs of the things you buy is not reduced, but the quantity of what you've got inside it is like, so why don't we just make it look like the size of what you're selling to me? But let's hear what your thoughts will be on 0809 444 0981 will be where we like to read on WhatsApp to see the messages. Let's get into inflation issues and knowing the figures we've got right now. 28.92% in December and over 33% for food inflation. What impacts on the consumer goods firms in Nigeria?
Well, like I've said earlier, a major impact of the inflationary pressures on the consumer goods sector is higher input costs or production costs generally. So the cost of accessing raw materials, labor, and energy are up as a result of higher inflation. You see 28.92 as at December, and this has negatively impacted the consumer goods sector. Also, we've seen the hawkish stance of the CBN, that is in order for them to curb inflation, that is them increasing interest rates, and we expect interest rates to continue to go up at least in the first half of this year. Higher interest rates translate to higher borrowing costs, of finance costs, that is making it difficult for firms to expand their production activities. Also, I should have mentioned earlier, with the depreciation of the naira, many consumer goods firms who have had foreign currency denominated loans in their books before the FX liberalization policy. By the time we saw that the naira started to depreciate rapidly, it increased the naira value of those debt obligations. So overall, inflation puts pressure on the bottom line revenue of these companies, as sales volumes or revenues, top line revenues, may not increase significantly during the period of high inflation.
So let's flip that coin so it doesn't look like we're concerned about these manufacturers. The man who consumes and keep the man and the woman who consumes and keep them in business, what would this impact of inflation be on them?
Of course, inflation has weakened our purchasing power as consumers. What 5,000 naira could get maybe even in January 2023 is not, it's not the same as what you can get today. It is way smaller. The cost of living is higher, transport is higher, rent is high. Everybody's feeling the impact. In response, the CBN is raising interest rates and making borrowing more expensive, and many consumers have had to realign their spending to only their needs. They'll think, oh, if it's not saving my life, do I really need it? So that is the impact.
Well, I don't know if you have a crystal ball beside you there, but I just want to see if you can give us and the listener also some good news. What would your forecast for inflation be for this year? Give us some good news.
Okay, so in our recently published Nigeria Strategy reports for H1 2024, back at ARM, we highlighted three scenarios for inflation. That is the base, bull, and bear cases. For our bear case, we forecast an average inflation rate of 24.39% in 2024, and is based on a slight improvement in FX supply levels in relation to 2023. And we expect that exchange rate depreciation of between 800 naira to a dollar to 850 naira to a dollar. We expect that PMS prices will average 650 to a naira, 650 naira per liter, and we also expect stable food supply. On the bull case, we expect that average inflation will reach 23.51%, and is based on significant improvement in our FX supply levels. Expect currency appreciation to 700 naira per dollar to 750 naira per dollar, an average PMS price of 600 naira per liter, and increased food supply. Finally, for our beer case, we expect that inflation will reach 25.76%, and it's based on the expectation that FX supply will worsen. Naira will stay above 850 naira to a dollar. PMS prices will hover around 800 naira per liter, and food supply will worsen. So this is just our scenarios for our inflation forecast.
So listening to you, it would seem it comes across as what goes up will come down. Do I sense a moderation in exchange rate and in inflation? Is that what you're giving to us this morning to go with this for business?
Well, we are optimistic about that. So we expect a less volatile naira in 2024, and is on the back of improved FX liquidity coming from the proposed 7 billion US dollars NLNG dividend securitization, and the just concluded 3 billion naira 3 billion US dollars Afrexim bank loan. We also expect improved crude oil production, but we know that with the OPEC plus quota of 1.5 million barrels per day limit, um, and we also expect increased crude oil price. So on the back of all these factors, we at ARM we see the naira close within a range of 800 naira to a dollar to 850 naira to a dollar. For inflation, like I said, it rests on several factors, like I've mentioned, just like the direction of fuel prices, the level of naira depreciation, and food supply, whether it worsens or not, and possible improvement in FX supply. So overall, for inflation, we see it ending the year between 23.51%
Mm.
to 25.76%.
You just there's just one more item left on the tray for you this morning. So if you can do this for us in about a minute, we just that will be good. So should consumer goods stocks be on the radar for those listening right now?
Okay, generally in the consumer sector, we expect to see some interesting activities in terms of corporate actions. We expect to see the conclusion of the merger between, Dang Sugar, Nascon, and Dangote Rice. The announcement of this merger last year saw a rally of the stock prices of these tickers, especially in Dang Sugar. We recognize the presence of inflationary pressures and FX challenges, but we see these players in the consumer sector keeping their products high, the prices of their products high. However, as I said earlier, it's this strategy of hiking prices of products would work efficiently for tickers or companies with less competing substitutes and strong brand loyalty. Overall, we advise that investors should position themselves in tickers that have proven robust fundamentals. So that's our advice.
Yeah, so it's going to look like a very productive Tuesday as it's coming across from what you're saying. But let's get on to a bit of messages before we say goodbye to you, Callista. So I've got Gilbert Musa from Festac saying, I recently experienced low quantity of products from a pack of some nuts they bought somewhere. In 1962, Michael Okbara advised professionals. You see, when Gilbert comes on the show, it takes us back to history. Michael Okbara advised professionals like doctors, engineers to embrace community farming to aid local production and domestic self-sufficiency in Nigeria. Till date, the opposite is what obtains. We have a large appetite for imported goods, so not surprised at the pressure on the naira. That's from Musaz now. Let's get to find Oluboroko now with a message. The pace at which inflation rate is flying right now may lead to massive cuts, job cuts, since many companies won't be able to keep up with this inflation speed. However, I believe this CBN is trying its best to stem inflation. Let's give them time. Find Oluboroko's thoughts. And Ayodeji missed out on some of the conversation and is asking, where can I get a recorded bit of it? So we've got you covered. So if you're listening now, you can race down to youtube.com/smooth 981 FM Lagos. Just go ahead, search for us on YouTube. Find us there. You'll find previous edition and today's edition of Business Express. Callista, what else can we say to you but a big thank you for helping us start the day. Callista is of ARM, Research Goods, Consumer Goods Analyst, ARM Securities. Thank you for your time. Have a great day.
Yeah, thank you.
And that's the size of the show. My name is Omatseye Atsenuwa.